why are the markets bouncing? Why are the markets bouncing? Once we know the answer, then we can know when will they bounce, if they bounce at all. Is this the top of the market? We're going to get a comprehensive look at if this is going to be top of the markets, because this is not just the crypto markets, but it's also the US stock market. I don't know if you've noticed or not, but basically they're going down at the same time, right? And well, crypto was slightly earlier by about 5 to 10 days. Now, if for folks who understand what's going on in the real world, in the economy, it'd be very silly of you if you only look at crypto. Because what happens is basically, crypto is like all up, if you include all the cryptos out there, it's only like 2 trillion in market cap. The US stock market is something like $35 trillion in market cap, right? So, and the US bond market is something like 80 trillion, something like 60 to 80 trillion dollars. So, when the US stock market and the US bond market moves, right, then even just a small move in those markets can move Bitcoin and all cryptos by like a large margin. It's basically, crypto is like a little ant riding on the back of a giant elephant, if you like. Okay, so a lot of folks don't understand what's going on, and they only look at cryptos, and that's why they get caught in these sort of crashes. Because I've been making videos saying that I think what's happening in crypto with the crash is front running what's happening in the stock market and the bond market. By that I mean that usually the investors on Wall Street see Bitcoin and Ethereum as a risk, as a high beta version of the stock market, of the magnificent stocks, the 7 stocks, of the tech stocks. That means they think Bitcoin ETF, like the Ethereum ETF, like that IBIT, which is the BlackRock Bitcoin ETF, is kind of like a high leverage, high beta version of the Magnificent 7 stocks. So that means if they think the Magnificent 7 stocks are going to go down, then they sell that Bitcoin ETF on Wall Street first because it's more risky. So they keep the more blue chip stocks. That's not from me. That's their thinking. That's their opinion. So today we're going to have a close look at what is causing all of this, and why the stock market is dumping. What's causing this in the economy, and what's causing cryptos to dump as well. So before we get to that, let's quickly answer the question of which crypto exchange does Pablo He-Man use? Well, I use a crypto exchange that is non-KYC, and they're offering some great prizes right now. Chance to win a Tesla Model 3, Rolex, or Vision Pro just by signing up and trading. And it's a limited time offer. It's a non-KYC exchange, means that you don't have to show any ID. That means, of course, Americans can use it because they can't even see that you're American. That means the IRS can't see you, the tax office can't see you, the FBI, CIA, nobody can see you, right? That's why Pablo likes them. So if you are on YouTube right now, then the link is in the description below. But if you're on some other major platform like this one, for example, then basically just click on my stand link. Go to my profile page, click on the stand link, and it'll be the first one that comes up. But keep in mind, folks, only with this Pablo link to win all these great prizes. Only on the Pablo link right here. Okay, so let's get into this. Right now, we're seeing the stock market dumping, right? So basically, stocks have to hold up. Stocks have to hold up before. If I don't know what idiots out there would think that if stocks crashed, that Bitcoin or crypto would survive. Like, name me one instance. Name me one time when the stock market actually crashed or went down, like not even a crash, went down even slowly, like 20%, and Bitcoin and crypto did not go down like 30, 40, 50%. Name me once that happened. Never happens. Because whether you like it or not, Wall Street, right, considers Bitcoin and crypto to be risk asset. You may not think so, but that's what they think. And they control, as I just told you, $35 trillion in stocks and another $80 trillion in US bonds. and that's like about literally 50 times bigger than the crypto total market cap. So let's have a look at what we need. This is the most important one. That's the SP 500 ETF. It's more important than the Nasdaq once again because it has much larger market cap. It basically needs to get back into this channel. See, get back into this 585 area and stay in this channel. This channel started in October 2023, which is kind of the well, it's not exactly the start of this bull run, but it's been 1.5 years, right? It supported Nasdaq for this 1.5 years. It needs to get back into that channel. If it doesn't, then next support level would be something like 565, 560 area. See, this 560 area is also this 0.78 0.78 on the Fibonacci ray trace. So basically, right now is Tuesday, market open in the US, and we're seeing possibly a bottoming tail here. If it does a bottoming tail, then we're going to start seeing the stock market bounce, and that's very positive for Bitcoin and crypto. The Nasdaq Composite is already showing a bottoming tail here. That's pretty good. QQQ is the Nasdaq 100 ETF, also showing a bottoming tail. But as I said, the really big one is the spider SP 500. We really need that to close in like somewhere like 579 would be best, or higher, and close in a topping, a bottoming tail. So the reason why I'm confident in saying that my analysis has been correct, that this whole dump was basically crypto, which is seen as more risky, and Wall Street investors dumping crypto, the most risky assets they have, they go, well, we dump crypto and we keep the safe ones. We keep the US Treasury bonds. To them, that's the safest ones. And then we start selling the second most risky ones, which are the tech stocks, which are the Magnificent Seven stocks, right? How can we tell they've been doing that? Well, look at this, right? This is all the crypto ETFs on Wall Street, crypto funds, right? And it's the largest outflow on record. Basically, IBIT, right? Like the ETFs from BlackRock, the ETF from what's it called? From Fidelity, those big ones. Wall Street has just been selling it, right? So that also goes to prove that that's what they're doing on Wall Street. They're basically selling cryptos. They're trying to get out of cryptos, and then they think about getting out of US stocks, the tech stocks, which they consider to be blue chip, like the Apple stocks or Nvidia. And Nvidia, as you guys know, folks who have been watching me, I've basically called this to a T, been saying that Nvidia is going to crash, and or at least the top is playing out. I tweeted around here, right, to my Discord, and then in early January, mid-January, about the DeepSeek moment causing the crash. That was a DeepSeek crash, and I said we'd get some sort of bounce here to the red rising channel, right? Tag that, come down here, probably get another bounce. I was thinking of this 118 area, right, as high as 131, and then we go down. So far, it's kind of playing out, except it's a much more exaggerated move than what I had in mind because of what DeepSeek's doing. DeepSeek's pretty much proving that NVIDIA GPUs are not really that much needed. You don't need that much of it. So why am I analyzing NVIDIA? Because it's the largest stock in the United States, and it's the leader of this whole AI narrative. If NVIDIA crashes, right, like my chart is playing out, this would create a monster shoulder pattern. If that goes down, then it's a good chance that the entire U.S. stock market could go down. So let's have a look at another chart which could be very useful to us. So what could turn this around? What could basically turn the entire crash in the markets around? There are two basically magic bullets that I see that can turn this around. Either Trump, does some sort of crazy policy to suddenly shock the markets. From what I can see, the craziest policy he could do is basically just stop what he's doing. One, stop the whole tariff wars, right? Like, because it's not just China he's taking on everybody. He's taking on US allies of US, Canada, Mexico, European Union, 25%. China, 25% already, and an extra 10% on top. So then China fired right back today and says 10% on all US agriculture. Now now Canada's firing back as well. EU is about to go into a trade war with the US once Trump starts 25% tariffs on the EU as well. So that's obviously, it's a lose-lose situation for probably everybody. But some people are not going to agree with me. That's fine. So tariffs are one of the reasons that's causing stump. Elon Musk doing his DOGE, Department of Government Efficiency, which means cutting U.S. government jobs, cutting U.S. government funding. That's good for the long term, right? That's healthy. In a way, it's healthy for the U.S. government in the longer term. But in the short term, we're not going to see those benefits. In the short term, all we see is 100,000 government employees lost their jobs. 200,000 government employees lost their jobs. Like, imagine, he promises he'll get to 1 million job cuts from the US government. That just literally means, people lose their jobs. Also, have a look at, okay, so the magic bullet is for Trump to stop what he's doing. I think he's got too much ego to do that. So what's another magic bullet we can depend on? Or not depend on, but what that could happen? That would be the US Federal Reserve. The US Federal Reserve right now should be cutting rates because the economy is not doing well. And let me just show you guys something. They're worried about something called inflation, obviously. But as I'm about to show you, the true US inflation, is actually right now only at 1.4%, right? The way they measure inflation is called the US PCE data. And I think the US PCE data, right, it's more smoothed out. So see this massive move here, this massive drop from 2.33% down to 1.44%, like a almost 1% drop within like 2 weeks. So they consider that to be too volatile. The true inflation in US right now, United States right now, as measured by this stat, is something like 1.4%. But the Fed is not seeing that. They're seeing a lagged indicator, meaning slower, right? Their indicator still says US has like 2.8, 3.1% inflation. Because whatever is causing this fall in inflation, whether it's rent, housing, or people just losing their jobs, like I said about Elon Musk, their core PCE measure is more what they call smoothed out. So it's more like it's slower in reacting. So they still think inflation's high, but we really need them to cut inflation, to see that inflation is coming down and cut interest rates now. Two things the Fed can do. March 19, which is only about 2 weeks, exactly 2 weeks from today, they're having a meeting. By then, they could. It's a small probability now, but in 2 weeks' time, they could change their mind. They could cut interest rates by 25 basis points and become dovish, which means they signal more rate cuts to come. And they could also say, we're going to end QT. That doesn't mean they start QE, but saying they end QT, that will pump the markets, right? Let's have a look at the odds of this happening. The odds of the Fed doing this has gone to above 50% now. See, these two shows they could cut rates once or cut rates twice. 5% chance to cut rates twice by May 7th, by early May, and almost 50% chance they're going to cut rates once by early May. So at least once, if not twice, by early May. And we can see that, look, just yesterday, the odds of them not cutting rate is 62%, right? The odds of a rate cut was only like 38%. Now it's become 51%. So in 1 day, we have that jump. So basically, just keep those things in mind, folks, because what it means is that the Fed, because what it means is that the Fed is will react to the markets. Will react if we keep on getting crashes and panics like this in the market. The Fed will react. So that is why I still hold out the possibility that we can have a blow off top, right? A blow off top in stocks and blow off top in Bitcoin. That is still possible. There's nothing indicating to me that it's all over. For Bitcoin itself, we're having another, we probably can end up here like 85K, 86, 85.8, and have another bottoming tail. But to me, once this 92K area is broken, support, as long as we're above it, then we're in consolidation mode. As long as we're below it, then the target for me is likely I say 73K. We had a bounce here, and because we closed below, like this was a mini crash yesterday, so that to me was a retest. We go down, we retest 92 again, right, and then likely to work its way into low 70s, right? So okay, and for all the Aussies out there, the exchange that Pablo uses in Australia is SwiftX, good on ramp and off ramp for myself. And the link is in the description below. Thank you for your time, folks. I'll catch you in the next episode.